Well, the markets are open for the first time here in 2021 for a daytime session. And I want to go through these markets and take a look at what they mean with Dewey Strickler of AgWatch Market Advisors. He's based in Franklin, Kentucky. Beginning with the corn market, here we go. The March corn is currently showing some follow-through buying from the overnight session. It is trading at 4.89 3/4 right now. That is 5.5 cents higher. However, we had a high last night of 4.97 3/4. Got within just one tick of 4.98, 2.25 cents away from that magical $5 mark, and then it fell away from that. So right now we're off of that by about 8 cents. Still 5.5 cents higher compared to our close at the end of 2020. On the soybean trade, after some magnificent gains overnight, we have January soybeans, which are in delivery now, 24.25 higher. The March contract, 27.5 cents higher. We're at 13.38.5 after a high overnight of 13.49.5 per bushel. So we're off of that now by exactly 11 cents, even though we're still up an amazing 27.5 cents on the day at this point. In the wheat in Chicago, March is trading 2.5 cents higher. We're at 6.43 per bushel. Had a high overnight of 6.50 per bushel. Meanwhile, Kansas City wheat is 2 cents higher, and it's trading at 6.05.5 right now after a high last night of 6.13 3/4. So it's off of its overnight high by roughly about 8 cents or so right now. Minneapolis spring wheat has March currently 5.5 cents higher at 6.04 3/4. So let's dive into these and talk with Dewey Strickler. Dewey, what do you think of the open here to start out 2021? Is that setting a pretty firm foundation in your opinion?
Well, it may be here and then it may not. And let me just back up and clarify that. Corn's been up about 15 days in a row, so we're due to take a hit in the corn market. The two things I am looking at here right now that's going to determine the direction of the market, one is the dollar. As I mentioned on your program last week, I think we're in the last leg down in the dollar. We're going to be looking at a major low, and that's going to create some pressure on the grains. Second, we have the commitment of traders report that was due out Friday, will be out today. Now, very likely it's going to probably show that we may have set a record long position in corn and possibly close to a record in soybeans. Now, if the dollar bottoms, you have that length held by the funds, that is not going to work out too well.
So soybeans still right now, well, we're actually showing, I'm sorry, that is the November contract. Let's go to the January. It's in delivery here, but still 23.25 higher, similar to the March action at 13.38.5. And boy, that is really something outstanding. We were showing a 10-year chart earlier this morning. And Dewey, I know you watch that too for significant patterns. And in the bigger scheme of things, I know you follow the Elliott wave theory when you study charts like that. But when you look at a 10-year soybean chart, where are we if you look at that Elliott wave theory?
We're getting pretty lofty here. Here's what I'm looking at. I'm looking, for those that follow Elliott wave and beans, I'm looking for a primary wave 3 top, followed by a, let's say, 25, 30-day correction. Then I think the market will go up and make its final high, the fifth wave, and when that occurs, I think we're looking at a multi-month, probably a high that's going to last us here for a year or two.
I thought it was interesting on that 10-year chart. We were looking back, and I believe it made the low in 2011 in the wintertime as it went over into 2012. Made a minor high in April, sold off in May, and then it went up, and the biggest peak there was actually in September of 2012 when it had all the action. So it's interesting that it had two spikes that year, and it sold off in May as planting season was wrapping up. So keep that in mind, too. Just looking for any kind of clues that we can find right now. Dewey, we'll come back in a moment. We'll take a look at how we're opening in our livestock trade coming up. We're talking with Dewey Strickler of AgWatch Market Advisors. Let's take a look at our livestock trade. We'll begin with live cattle and take a look at the big board, see what the momentum is this morning. Currently, everything is with a downward note. Of course, keep in mind, you have to compare that against the fact that we have feed grains sharply higher this morning. So February live cattle are starting out the day at 114.72, and that would be down 30 cents from our close on Thursday. You have the April contract now down 55 cents. We're at 118.70, and that's down about 80 cents from our earlier high this morning. Actually within a dime of our low of the opening session here. So kind of choppy action to begin already here this morning. Now moving on to the feeder cattle trade, the January contract is 95 cents lower at 138 even. And the March contract $1.40 lower now, and now $1.52 lower at 138.70 here again, within a dime of our low of the day at this point. But on the other hand, you look at where we had been for an early high, 139.90. We're about $1.15 off of that already. So it had been up there close to unchanged in the early going, but starting to feel quite a bit of pressure now. Lean hogs, though, are higher. February is currently up $1.12. We're at 71.40 per hundredweight, and you have April now 65 cents higher at 72.90. And interesting that the nearbys are showing the most strength for the most part here in the lean hog trade. So let's pick these apart here. Dewey, what are you looking at on the livestock trade to start out this week?
Well, first of all, when I look at the hog market here, it is being supported by the cutout. Export sales were higher here. I think we could get our February contract a little bit above 72, maybe 73, somewhere in that area, and then I believe we're going to begin to fizzle out. As far as the cattle are concerned, I think they're just in a trade range here, and like you hit on earlier, you know, the corn values is giving the market a little bit of a problem here as far as the livestock, and especially in cattle.
I would imagine that would have more pressure on the feeders then?
Yes, correct.
All right, so let's look at the cutout values as we wrapped up last year. On Thursday, we did get an afternoon update from USDA before everybody went home for the holiday break. And it was down on the beef side. We had choice cuts going down by 58 cents. This would be Thursday afternoon. It was priced at $209.95 on the choice cuts. Selects were down $4.21 though. So that spread really widened back out. It went out to $14.30 between them. And on the pork side, you had the carcass values actually gaining $5.93 at $78.58. And the loin values were up $1.09 Thursday afternoon. Hams were up $2.05. Bellies were up an amazing $12.80 that leapfrogged over that $100 benchmark and all the way up to $111.88. We'll see what they want to do today to start out the year. Dewey, thanks for all the information. Great stuff, as always. Dewey Strickler of AgWatch Market Advisors. He's in Franklin, Kentucky. Janet, back to you.